All right. Well, the market's rallied again today, third straight day, fifth in the past six sessions. Today, thanks to a much better than expected PPI report, much lower than expected. Of course, yields fell, and the markets cheered that because of obviously the idea of rate cuts and what will end up happening there. Again, we opened up near the highs, and we didn't like really build too much on it, so it wasn't the most bullish pattern, but it was still bullish nonetheless. And the other bullish aspect to the markets today was the rally that we had in the energy or technology complex, thanks to Oracle. Oracle up to 36% today, making Larry Ellison, the CEO of Oracle, the founder of Oracle, the richest person in the world, passing over Elon Musk with today's move. So that really helped the technology complex out, and ending up the day up with energy and utilities as your three best sectors of the day, which is not your typical, three-headed monster, so to speak. So a good day on some fronts, a not so good day on others in terms of maintaining a strong breadth, maintaining a strong technicals. The technicals continue to get tired. The trend continues to be mature and showing signs. There's a couple of red flags that stand out. I've already brought up one to you. I show you that again. But there's another one that I talked about extensively in today's technical analysis class that I've been telling you to pay attention to, but it's showing a pretty significant red flag right now for the markets. So I'm going to show you that. But I'll give you also my expectations, despite those flags, my expectations of what I think the market will do and over the next few days and into next week, and what will drive it higher. And we'll take a look at our trade idea of the day for a stock that's not in your typical bullish sector, for a bullish trade idea that could lead out in a tired bullish trend. So let's go ahead and get started. Today is Thursday, September the 10th, 2025. This is the market outlook from marketscholars.com. My name is David Settle. All right, let's start off taking a look at the S&P 500 with the market forecast indicator. As you can see, we rallied again today, up 1/3% off of the highs, but still above yesterday's high. We closed easily above yesterday's high. In fact, we closed almost above, just about above the all-time, like the all-time high that we had, the all-time intraday high. There's 65.32, 65.65, and we close at 65.32.04. So just 600 or 6/10 of a point less than the all-time high that we had previously going into today, all-time intraday high. So a new all-time closing high, new all-time intraday high as well. So very strongly bullish from that perspective. But what did I say? 1, 2, 3, 4, 5 out of the last 6 days to the upside. The intermediate line is strongly bullish above the 90th percentile. Market sentiment is also still strongly bullish, even though it's falling. It has been for a while now, but it's still above the 80th percentile itself, and probably won't stay falling for too long as the intermediate line's above it. The near-term line, however, is still failing to get above the 80th percentile itself, and that's a little bit of a negative sign, because we're getting, again, small ranges and we're gapping up. Most of these days we're gapping up, but we're closing below. Like this day we closed, let's see, we only closed 3 points above the open. Here we had a good strong day. Here we closed 3 points below the open. Here we closed 9 points above the open, and then here we obviously closed 18 points below the open. So that's probably why you're getting the near-term line just not really doing much of anything, not in the upper reversal zone, still in bullish territory, so still a near-term rally, but again, not as strong and susceptible because of where that near-term line is. The momentum line is neutral, so it's not really dictating one direction or the other. Again, we had a pretty decent range today. Again, relatively decent, still significantly smaller than this extremely low ATR. So there's still that, and CPI is coming out tomorrow, and that might impact some things a little bit here. And then we are over 1 2/3% above the moving average, so we're still doing pretty good. Like, we're getting closer to that kind of 2.5% range, which you really like to be at when you're bullish. When you're below it, right, that tends to signal that you're not as strongly bullish, and eventually, as you saw here, leads to a decline. So you like to be up there. That really kind of signals the strength of a trend. It's when you get below that and you stay below it for a while, it signals kind of a weakness, like kind of a convergence. And obviously that's what we've had pretty much since August the 1st. We had that dip. We were doing great, and then August the 1st we hit the moving average. We bounced off of it a few times, but not very strongly, at least not strong enough to, again, avoid these ideas or thoughts of this convergence happening. That ultimately would lead to a divergence, right? A move where the moving averages all expand away from each other. And in this case, most likely because of a move to the downside. Let's take a look at the NASDAQ 100. As you see, the intermediate line has finally gotten back into the reversal zone after its rally. Again, only 0.04 of a point higher today, so a very flat day for the NASDAQ 100, despite the fact that three of its biggest components had great days today. But you did cross above market sentiment. You did cross above the 80th percentile on the intermediate line. The near-term line is still strongly in bullish territory, even if it's not necessarily above the 80th percentile itself. And the momentum line is down, but not down significantly. And again, when it's in bearish territory, the good thing is that you would expect it would bounce to the upside. So that's a good sign for the NASDAQ. When you look at the Dow Jones Industrial Average, again, the momentum line dipped below the 20th percentile, barely, but at 19.85, dipped below the 20th percentile. You have a strong bullish posture above the 90th percentile. In this case, very strong because of that. So you have a bullish intermediate confirmation signal, an oversold momentum line. Last time we had that, it was right here. We had a little tiny dip because the near-term line wasn't down very much. Well, the near-term line is not down very much, even less this time. It's down, but it's still pretty high. So probably not the best bullish buy the dip signal, but we might get a little tiny pop out of this, again, going into the end of the week. And then finally, looking at the Russell 2000, again, you can see its near-term line is in bearish territory. Momentum line is also down there, not oversold, but down close. So this would suggest, that we could get a little bit of a bounce, considering, again, that the intermediate line is so strongly bullish, itself also being above the 90th percentile. So a little bit of a pop, a little bit of a move lower on the Dow and the Russell, nothing too major, but considering the strength still in the large cap indexes and considering that this weakness hasn't been, has been more of a bullish pullback more than a bearish pullback, then again, you would suggest that we'll probably get, a little bit more buying, especially if we get a result from the CPI like we got from the PPI today. But we probably should get a little bit more buying from the markets. Again, nothing too significant, but a little bit more going into the end of the week here. All right, well, that does it for our Market Outlook preview video. If you want to unlock the full version of our Market Outlook video today, the full 30-minute version, scroll to the bottom, click in the description or the pinned comment down below. You get access at our website to our Market Outlook blog post. All of our subscribers and market scholars get access to the full version of the Market Outlook video, including our foundation members at just $29 a month. For that, our foundation members get the full version of the video, including the trade idea at the end of the video. We always do a trade idea every Market Outlook. We manage those trades and put them on before the market closes at 3:30 Eastern Time with a live stream called our Market Outlook Live. And then you also get access to our trade tracker where we track the results of all those trades throughout the course of the year. Again, that's all for just $29 a month, or about $1, a little less than $1.40 per video. So a really good value considering what you get, especially not just the information in the videos themselves, but the trades that you get and the results that we've seen over the course of this year. So again, thank you for watching. Remember, subscribe to our YouTube channel, hit that thumbs up icon, comment on the video, share it with anybody else. Follow me on Twitter for more content between the videos at DavidSettle42. So you can follow me on LinkedIn, Facebook as well. Like our content on all those platforms. Helps us get it out there to everybody. Have a great rest of your Wednesday night, everybody, and we'll see you all tomorrow.